So welcome everyone to this webinar that we have today. I'm Mogens Ryge and I am joined by Raj Sheth of Leverage, who will take us through his presentation, his agenda. We'll be maybe waiting one more minute before Raj really starts off so that people can get in the room. I see people are arriving. And I'm very thrilled with this opportunity that I've had with Leverage Shares to market this webinar. Raj, even if people are still coming in, I think maybe I'll just leave it over in your capable hands. I will then mute my phone, not to interfere, and I will make sure if there are anything popping up on the question sides that I can notify you when and if you want that. So over to you, Raj, and everyone enjoy this webinar.
Thanks a lot, Mogens, for organizing this webinar, and thank you everyone for taking time out from your day to join this webinar on how to launch your own ETP on a main European exchange. I wanted to just set the parameters up front so that you'll have a better idea of the time management. I will try to do the presentation in about 20 minutes, though it's quite a vast topic, and hence I have to deal with it at a very high level. By definition, white label is about a customized offer. So there will be a lot of questions very specific to your requirements, and we will deal with it hopefully offline. We will try to answer most of your questions during the presentation and after this in the FAQs. So the way we are going to do the presentation is very quickly introduce Leverage Shares, try to talk about exchange traded products as a wrapper, and then go a bit more into detail on the white label service itself and why this is something many portfolio managers should or are considering. So with that, I'm happy to introduce you to ETP Launchpad, which is what we call our white label platform. A bit of background on Leverage Shares. As of 2-3 weeks ago, our AUM is now $600 million. We have about 170 ETPs, which is just under 10% of all the ISINs in this category on the London Stock Exchange. We have our products on the London Stock Exchange, over 100 ETPs on Euronext Amsterdam, over 100 on Xetra in Frankfurt, and we are growing our presence also with Borsa in Italy. One of the main reasons Leverage Shares was formed was to enable to democratize access to strategies for normal investors that were up till now only accessible to professional investors. So we actually innovated the single stock short and leverage category. So to give you an idea, our 3x Tesla is very often in the top rankings of London Stock Exchanges, traded ETPs, and also very often we have 1-2 other names that regularly feature in the top 10. Now, what we try to really do is tap into the changing investment macro situation. For example, increasingly we can see the impact of retail mid-size investors. We can also see a big change in the way investors of a certain age prefer the home market, but the younger investors, they prefer to take a more global approach. They are more comfortable in investing, say, for example, in Tesla or in Alibaba or in Coupang or Apple. So we tapped into that and we've been able to grow since we started the company in 2017. The reality is the team really built up over 2020. We had obviously a tough period over COVID, but that also helped solidify the change. It made the change in the investment situation faster for investors, for brokers in the adoption of technology, and we have sort of benefited from that. Accepting that and knowing that we are an innovative firm, we also realize that no portfolio manager or no one has a monopoly on great ideas. So there are many portfolio managers with great ideas, with great portfolios, great strategies. And what we are looking to do with this white label is to say, okay, we can partner with them. We've got this massive capability and competency to create and distribute ETPs. And this is something that is of value to many portfolio managers who up till now have not been able to get an ETP or an ETF of their own. So up till now, this has been the domain of the large issuers, the large asset managers, and the specialist asset managers, because the costs and the infrastructure are quite prohibitive. So what we're trying to do is make it accessible to everyone. So what is an ETP? Exchange traded product. It's a family like ETFs, ETCs, ETNs. But basically, the investor is trying to get access to the performance of the underlying index or the strategy. This can be passive or it can be active. Now, most of you already, of course, know about this. It's exchange listed, real-time pricing. There is a spread. There's a market maker supporting the pricing and the liquidity. The total cost of ownership is obviously coming down with time as there are more people getting into this space. Distribution is very important, and ETPs actually help in providing access to the entire range of investors, whether it be institutional, professional, mid, retail. And of course, safety is a big feature for portfolio managers and investors. And in this case, our ETPs are set up as a SPV with all physical underlyings. So in fact, what we are trying to do with our ETPs, actually, they are for MiFID purposes and ETN. It's basically a note for MiFID purposes, but we call it ETP so that it does not get confused with ETNs, which many in the market confuse with non-physically backed US ETNs. For leverage shares ETPs, what we have is actually two prospectuses. One is approved by the Central Bank of Ireland, and that is mainly to serve the entire European Union. The other is approved by the FCA in the UK. So post-Brexit, we made these changes, and it enables us to work quite seamlessly across the UK and the European Union. Now, the main benefit of an ETP, the way we see it, is that we've taken multiple complexities and wrapped it into a very simple wrapper in an ISIN, basically. So in effect, if you take some of our short and leveraged ETPs, we've been able to take, let's say, a stock like Apple or Tesla. We can get an inverse of it, and then we can overlay it with currency so that a retail investor could get an inverse exposure should they choose for a name in their own currency, so in euros, for example. Now, that is not something that is easily possible to do unless it was in a unitized ISIN. So there are many complexities that could be taken, unitized into this ISIN of an ETP, and then be distributed quite easily across multiple channels, even though the channels may themselves not have the infrastructure otherwise to deal with multiple complexities. So the question is now, do asset managers need an ETP? And, from the macro trend standpoint, it's quite visible that this is the way investors are going. This is also the way that asset managers feel that they should be, launching their products, launching their strategies. Some of the benefits are quite obvious and straightforward. Instant trading. Online, you know what the price is. You can buy it and sell it, rather than some other instruments where you have to wait the next day to find out, what price you have traded at. There are also certain capital gains or, taxation advantages in this. So, for example, the leverage shares ETPs, they come under the UK fund reporting status for capital gains. I'm sure it will be different in different jurisdictions, but by and large, this is very, this is one of the reasons why these are becoming more and more popular. You can see it. The big houses are already moving in that direction. Where possible, they're already issuing two classes. And also they are converting, or in some cases, only launching it in an exchange-traded format. Also, the thing is that retail and mid-size are becoming more active. it is actually beneficial for asset managers to also be, trying to approach them, target them, get their investment. So do you need an ETP? That's, of course, for you to decide, but we are engaging in a lot more conversations, and this is the way we see the market going. Now, basically, it's about wrappers, in effect. The way we see it is there's version 1.0 wrappers. Most of them are very well proven. They work very well, but they were developed or designed in a different era. So yes, they serve their purpose, but if you're looking to grow beyond your market, then you have to look at version 2.0 wrappers. Obviously, when you're taking a decision of this type, choice between wrappers, you're going to look at the strengths and weaknesses of each. In this chart, we've just tried to identify potentially some weaknesses that the ETP can actually resolve. So it's not going to resolve all the problems, but in many cases, it's going to resolve many of the problems. So you have to take into account, obviously, other factors like the total cost of ownership, the convenience of running the strategy, the regulation, the distribution potential, the taxation of the underlying strategy overall, the basket makeup. So these examples are just trying to highlight some of this. Once this process has taken place, then in this case, what we've tried to do is portfolio managers usually shortlist 2 or 3 wrappers that they're most comfortable with. Obviously, they'll compare the pros and cons of each. This is a very simple Venn diagram of our leverage shares ETP, an AMC, and a UCITS ETF. Now, of course, a UCITS ETF is a very, very good wrapper, but its costs also very, very good. And unless you're sure you want it, it's something that sort of breaks even at around $75 to $100 million. Whereas with our ETPs, we think a portfolio manager can break even anywhere between $5 to $10 million. Now, with UCITS, we are seeing that there are many good strategies that have been launched, but it really appeals to certain institutional investors. Retail and mid-size are not as driven by it. So the large institutions usually have 2 ways of doing due diligence. One is they approve the house, and then they approve the instrument. So, if you have got only 1-2 instruments, which are UCITS, yes, some institutions can invest in it, but quite likely they will wait for some track record, some history, some AUM, and then if a big house launches something similar, then it's quite likely you won't get the investment. But anyway, it is a very good wrapper in its own way. Now, once someone has decided, okay, these are the 1-2 wrappers we want to consider, then you've got to take into account what is the infrastructure you need to have for it, what is the talent, staffing you need to have for that, what is the time to market, what are the permissions you require to be able to take it to other markets, and then you have to build a range of competency around it. So we obviously are in favor of the ETP. That's why we've built our business around it. We think it appeals to most of the requirements that portfolio managers are looking for. So usually in the conversations that we are having, what asset managers are really looking for is distribution capabilities. Now, distribution can be across geographies. So it could be, let's say, a US run strategy that wants to get into Europe, or a region in Europe that wants to get to the other parts of Europe. Or it can also be to try to attract newer types of investors that, maybe putting in different amounts of money, but it saves you the hassle of having to do KYC on them and them on you, because that's also a cost, that's a cost in admin, energy, bandwidth. People are looking for instruments that are convenient to manage. You manage it at a unitary level, and then it goes at the same price across different platforms, across different markets and geographies. And then people are looking for safety of the physical underlyings, the security of it, and to enhance their own brand. So someone who's got a really good strategy, they're quite well known, let's say, in the Nordics. They obviously want to have their brand, but they want to make sure that their strategy can also go with that brand to other parts of Europe and the UK. So The way the white label solution works is that, of course, we have the underlying instruments that will form this basket. We are continuously increasing our range. Then, as we said, we've got this competency. It's like a factory. We are able to produce ETPs in quantity and quite professionally. We are often listing 20, 30 ETPs in one go. So we go through this process in a few slides. I'll just share a bit more on what the process looks like. And what you get at the end of it is your own exchange-traded product listed on a main exchange like Xetra or London Stock Exchange or Amsterdam or Bursa or any other exchange. We can talk about that if that is critical for your strategy. So what you get out of it really is pretty much, I put it under 3 categories. What people really want is visibility for their strategy. They want convenience of managing that strategy, and they want distribution of their strategy. So what you get is, you'll get your own unique ISIN, your RIC, you're listed on the main exchange, you've got a Bloomberg ticker, all the information is available across all these different data providers, channels, terminals, etc. What people also want increasingly is, okay, investors should be easily able to trade your strategy. So we have what is called a Broker Connect program, whereby we are increasingly working with some of the leading brokers, where we are enabling the uploading of the ETPs that we are able to issue for ourselves and jointly with partners. Considering we have such a large number, most brokers will engage in conversation with us and upload these ISINs to their platforms. Of course, there's the other case then of making the case to investors, appealing, writing, PR, sales, etc. But this is a very important thing that most of our partners are looking for. And what we do is, in effect, we are helping with the documentation, the passporting, the fact sheets, the EMTs, all the regulation, all the documentation, all the translation. To make this happen, it may appear simple, but we have to work with a massive ecosystem of partners to enable this. So, for example, the custody of the underlying assets are with, for example, Goldman Sachs and Interactive Brokers. The market maker is BNP. As I mentioned, we already work with the 2 regulators. So, we are able to bring this all together, and that takes a lot of time, effort. We've invested a lot in this infrastructure. And what we are doing also, besides, of course, engaging with all these other firms that make this possible, we also work with the data providers. So, for example, if you are wanting to make your ETP available in Germany, you have to be working with someone like WM Daten. The data has to be available via SIX, via Morningstar. We're doing all that for you. And also we enable some sort of basic press. Obviously, you're responsible eventually for the full PR, but we assist in this process. Now, what the engagement lifecycle looks like, who's responsible for what, and we are trying to get partners from when we decide we're going to work together to listing in about 8 to 10 weeks. This obviously taking into account that there's no holdups on the KYC or by any regulators. What we're trying to show is what we are able to deliver and what you have to deliver. And in this process, we are quite comfortable with it. We are doing it quite often, all the time. And also, once the product is actually listed, it does not mean the work is over. That's actually when the work really starts, around distribution, around engagement, around product management, around trying to get the investors aware of this and growing the business. This is just a slide showing what's happening behind the scenes, what is the role played by the different partners that we've shared in enabling your ETP, to trade seamlessly, settle, work out just fine, be available to investors. The way we see the breakdown of the responsibilities and what each person is bringing to the table, we think that the partner, the portfolio manager, of course, has to be wanting to grow the AUM, engaging in the sales, because you're the only person who can really talk passionately about your strategy, explain your strategy, why it is good, what are you comparing it to, etc. And brand building. Everything else we take upon ourselves to make sure that you can put your best foot forward. Everything works well for your ETP. So eventually, I'm trying to keep to my timeline. Eventually, what are you getting? In effect, what you're getting is reduced complexity in listing and distributing your own ETP. This is a European UCITS eligible ETP, which is compliant with PRIPS, which enable even retail investors to invest in your product. It can be listed in multiple currencies. So you can imagine that some brokers, if you buy an instrument in a currency different to your own, it's like 1.5% just on FX, one direction. So we are taking all that away as well. It will be listed in your own brand. So when anyone is searching for this product, they will be looking at it for your brand. As far as they are concerned, it's your instrument, you're managing it, you're running it. The time to market we are aiming for, as I said, is between 2 to 3 months or 8 to 10 weeks. And with this, we offer what is called, the Broker Connect program as well. So we've got obviously presence on multiple exchanges, but also I've got colleagues, for example, in Spain and Germany and even Korea, which was not out of design. It's just that a lot of Koreans liked some of our global products and started trading it because it was lifetime when they used to get back home. So actually, we are quite popular even in places like Korea and some markets in Asia. So at a very high level, this is what you're getting. Obviously, we can go into detail on an offline basis. These are some of the frequently asked questions that are often put to us. I think this sort of should answer many of your queries as well. But maybe let me address also the commercial side of how this works. On the commercial side, what we are looking to do is make this accessible for our partners, the portfolio managers. What we try to do is put a cost to actually create this ETP. And we charge just $20,000 for it. Now, and we know that $20,000 is not too much, considering we had to pay all the exchanges, we had to pay the market makers, we had to pay for the documentation, engagement with the various counterparties, translation documents, etc. But the idea is to ensure that people have skin in the game jointly with us. There is a cost, of course, maintain this ISIN, again, to take care of the multiple costs. That's about $40,000 a year. In this, we don't make much. We don't make any money really, right? Where we are looking to make money jointly with our partners is to grow the AUM. And we take usually a fifth or 20% of the fees. But again, it depends on how many ETPs a client or a partner wants to do, what AUM they're looking to do. Are they looking to convert their existing strategy into an ETP, or are they looking to launch a new, new strategy? So what we are aiming to do actually is to say, okay, we want to make the costs in such a way that we both have skin in the game. We are going to be putting in a lot of time, effort, our own infrastructure, our own costs, and you have to do the same. And then we have to see how we can jointly grow it. The benefit for you, though, is that you also get the benefit of our understanding of the different geographies and investor types, because we are continuously engaged in these markets. We are continuously engaged in these conversations. So we are not looking to make these dollars of you. What we are looking to do is grow the AUM jointly. And that is pretty much my presentation. Mogans, we'll be quite happy to take some calls or questions if people have it.
Yes, I haven't had anyone incoming. You've been very clear, apparently. I have one, and that is regarding the slide before where you talked about UCITS eligibility. So I've got just a little confused about the ETPs themselves are not UCITS compliant to begin with, right? Or how does it work?
UCITS compliant funds can invest in it.
Okay.
Not UCITS.
Yeah. We have one question coming in to begin here, apart from mine, and that is again what you were mentioning, the break even point in asset under management. Could you just repeat that again?
Sure. So usually, obviously, the cost I would put if you look over a 3-year period, because when you list a new instrument, you don't know what the market condition is going to be like. So you usually give it about a 3-year runway to make sure it's working out. Now, if someone is looking at a UCITS type of fund they want to launch, you're looking at a cost of approximately plus minus about $1 million over 3 years. So, that's to ensure you can afford that sort of money, your ISIN has to actually have a AUM of about 75 million to 100 million, depending on what you're going to be charging for it. So that's what we are trying to say in relation to the cost of the UCITS ETF. In relation to our ETP, because we are looking at, in effect, $20,000, then $40,000, even over a 3-year period, you're looking at about $120,000, $130,000. It's probably 7-8 times cheaper than a UCITS ETF. So the break even would be 7-8 times lesser.
So I was just thinking, if, as coming in here from a person saying that if they already have a lot of funds, not in an ETP product, but just either they have a mutual fund or similar, can they sort of transfer it? So saving money by, getting rid of the old structure and just go with the new structure?
Well, I mean, if they've got a lot of funds already, they may want to try both in parallel. I mean, that's what a lot of the large houses are doing. They're launching it in 2 different wrappers and seeing how it goes. They're trying to access new pools of investors with that. And then over a period of time, they'll make the decision. If you're, listing something totally new, then obviously you want to make sure that, you got the investors tied up to make it worth your while. But if you're listing something with a really good idea, knowing that, okay, it is going to be successful, and you've got, let's say, 3-4 different portfolios, then going, a route which is costing you about $1 million each is a big, it's a big risk.
And what if a retail client wants to buy a fund that has now become an ETP, but it's not on their normal broker platform?
So what we would do is we would definitely try to connect with the platform in question, engage them, and we are doing it all the time. We are doing it all the time already. So we are doing it across Europe. We are doing it also in parts in Asia, for example. We are engaging with brokers even in Korea, because that's, if investors want it, then the brokerage makes money by keeping the investors, by keeping their clients happy. And we would provide all the data, we would provide support, we would provide help in onboarding the products there.
Okay, so the next step for our viewers or participants, if they want to reach out to you, how would they go about doing that, apart from sending either you or me an email?
Sure. I mean, so the thing is, at the end of the presentation, we've got our contact details. They can go to the Leverage Shares website and connect with us there, or they can just email you or me, and we'd be quite happy to engage one-to-one conversation with them. I'm quite sure, in fact, I would encourage them to talk to I think there are 4 service providers in Europe, engage, try to understand what are the strengths and weaknesses each has to offer, because this market is growing and everyone has, something good to offer. So they should definitely try to understand what is best for them and, take it forward.
Okay. And one final question came in, and I'm just going to read it up straight in front. It says, is it correct that the BE is approximately $15 million?
Sorry, what is BE?
Yeah, but I hope you knew.
Sorry, what?
It just says, is it correct that the BE is approximately $15 million?
Break even. Yeah, I mean, I've given the costs. The costs are like, $20,000 to set it up, $40,000 to run. And then obviously there's a share we'll take of the AUM. So, you can run the numbers based on how much you're going to be charging for the ETP. So if you're charging 1%, then, in effect, on 10 million, you're getting 100,000. So, yeah, it depends on what your internal costs are looking like as well. But just for the fund itself, the direct cost, the break even is much lower.
Okay, I think we will wrap it up there. We are closing in on half an hour, and it's been smooth and efficient. So I would like to thank you once again, Raj, for giving me the opportunity to co-host this webinar with you. I've certainly learned a little bit more about ETPs than I knew before, and I believe that it's a great product for asset managers that wants to expand and grow their AUM into the retail market, which otherwise is a daunting thing to approach if you are especially a small or medium-sized fund manager where you don't have maybe hundreds of staff that can support you in that role. So once again, thank you very much. And for all that looked at this webinar, if you have any other questions, please reach out to Raj or myself. I'll also be very happy to talk to you about other webinars if you should wish to engage in this kind of promotion. So thank you, Raj, for today. I will terminate the meeting now, and we'll talk later.
Thank you, everyone. Bye.
Bye.